wanted to recap, right? So this is another way that you can find some quick trades, and this is something that we did. This is not how I did this morning, but I'm going to give an example, right? So say, right, so this is kind of mixed, right? Like I said, late afternoon, it got kind of mixed because there's a good amount of calls, there's a good amount of puts. So this is what I want to do. I want to go to my filters because I want to look at the SPY trades that came in this morning. So we're going to go trades before 10 a.m., right? Before 10 a.m. today. So in the first 30 minutes of the day, and I want to look at weekly expirations. So yeah, this is today. Where's my first one at? All right, here we go. All right, so anytime somebody, so this is what you can have it open. So, all right, so say you have this set up at open 100K weeklies. If you're day trading, you typically want to look at weekly expirations. If you're day trading and you plan on getting out of the trade within 15 minutes, you don't really care if someone's buying SPY calls that expire 2 years from now, right? You want to see these short-term expirations because you're going to be in a trade for a short amount of time. So this is the very first one that came in today that was a SPY weekly trade with over $100,000 spent. You can see that it's puts, large amount of money too, over 600K, right? This was right at 9:30. The market had been open for about 45 seconds. You can see again, we got puts, right? There was a call. It's never going to be all calls or all puts. But when I say talking about repeat flow, this is what I mean, right? So within the first 30 minutes, because we looked from 9:30 to about 10, you can see it's majority puts, right? Now, when the market opens and there's a bunch of money pouring into puts, what do you think that stock is going to do within the first 30 minutes of the day, right? So in the first 30 minutes of the day, we got majority puts. We only got 3 call orders. What do y'all think is going to happen to the stock price? All right, I said it's going to fall. So let's go see. So it's going to go down, it's going to drop. So let's look. This is SPY chart from today. This is exactly what it did. As soon as the market opened, it literally just started tanking. You could have bought SPY puts within those first 30 minutes. You could have bought SPY puts at damn near any point today and made some money. It doesn't matter what time you bought SPY puts today now. But talking about the opening bell, yeah, AP, I'm going to talk about that. But talking about that opening bell flow, this is what I'm talking about. So as soon as the market opens, you just see a ton of money going into puts. That means the people buying these puts, they didn't wait for any candlesticks to form. They weren't waiting for any patterns. They weren't waiting for any news to come out. They just were sitting here knowing as soon as this market opens, I want to get into puts. I don't care what you're talking about. Give me my puts right there at 9:30 because there's going to be an aggressive move. Now, again, that's not something that you're going to see every day. There's not always going to be strong repeat flow right at the open. If you do see it, it's typically going to indicate that there is a strong trend setting up for today, which is definitely what we got. This is not how I found my SPY puts this morning. AP brought up a good point. She talked about repeat flow alerts. So I'm going to talk about that. And say, yeah, bust down is falling off the bone. Shout out to Josh. It's the bust down. Shout out to Kendra. Right. And this is what I did to find my SPY puts. So I talk about finding repeat flow, right? Now, finding repeat flow with the real-time orders, that does require you to, set up some filters, do some scrolling, kind of watch it in real time, which is definitely a great thing to do if you have the time. But I said I was going to give some more information for my 9 to 5 folks. So this is an alternative, not even for 9 to 5 folks. Like I said, I use this today myself, but this is an alternative to kind of watching those orders come in real time. We have trade alerts. Trade alerts make it super easy to actually find what contracts have repeat flow coming into them because this is going to let you know, right? This R unusual, that means repeat unusual. So that means this specific contract, right? These 515 puts, 816 expiration in this case, this was triggered at 4:07 p.m. for repeat unusual. So that means this contract had a lot of money going into it. There was a lot of people buying these 515 puts, looks like right after 4 p.m. So much money came into this that it actually triggered an alert. Hey guys, there's a lot of money coming into this contract. It could be a big potential mover, could be worth looking into. So that is a quick way to kind of save time and find that repeat flow. I don't think I can go all the way back to what I saw today. No, I can't. That's okay. That's okay, because this one I did take a screenshot. So let me show you what I did. Here it is. All right. So this is today. I put out some SPY puts. I put this out at 9:56 a.m. as you can see. And so we got in, where's my 9:56 candle? That was this candle we got in, right? Now, this is a repeat flow alert that came in on SPY at 9:53 a.m. Now, I was not active at 9:30 a.m. in the market. I said I wasn't going to be active till about 10. Had I been active at 9:30, probably definitely would have gotten some SPY puts that open after that flow, but I didn't, which is fine. So I got active in the markets right around here, right? Right, like 10 minutes before 10 o'clock hit, so 9:50. So I was looking at the markets at this candle. At this point, we had already sold off pretty heavily. Right at the open, we went from pivot to pivot, right? So I have a pivot point here, right at 549. I have another pivot point here, 546.86. So we moved from pivot to pivot. Now, this is again, like if you saw that repeat flow at the open, you could have bought, you saw we rejected off of that pivot, you could have played it pivot to pivot. Now, like me in my situation, because I got active in the market right here, I saw that we were coming down to the S4 pivot point, which is I know is going to be a potential support level. So I said either one of two things is going to happen. Either we're going to bounce off of this and use it as support, or we're going to break through it and drop down to S5. Obviously, you can see which one of those played out. But at the time, I wanted confirmation, right? I wanted to know if I should expect to play the break or the bounce. This is what gave me my confidence to play the break of support, because remember, I'm watching at 9. This came in at 9:53, repeat flow on SPY puts. So this is when I knew I wanted to get into some SPY puts. I got in pretty much right after that order came out. Y'all saw the signal. These puts ran over 400% today. Um, Obviously, SPY had a strong down day. Now, how I would have managed that, there's a couple things that you can do, right? You can play that one pivot to pivot. Like I said, it dropped from S4 down to S5 before it did kind of chop around that area for a little bit and then kept dropping. But something that I really like on this one is that you can see on the entire drop all the way to S5 and below, it stayed below this gray line, right? This is my 8-day EMA, my 8-day exponential moving average. That was showing me that the downtrend was very strong, as it never was able to get above that until it finally did, which it then kind of rejected my other moving averages that I had that were not far. So basically, you can see it drop all the way down below S5. It kind of retested this, so we can see support kind of turning into resistance here. And then it bounced off of my other moving averages. My yellow one is my 21 EMA. My blue one is my 50 EMA. And then from there, it fell into oblivion, right? So I believe, right, we have pretty much the same setup on QQQ. Oh, look at this too. I know a lot of folks like to trade QQQ as well. So we'll also look at QQQ opening flow, because I think this one was probably stronger than SPY. So we have the same filter. So we're looking at QQQ with the premium spent equal than or greater than $100,000. And these are all the orders that came in before 10 a.m. today, because we want to see what that was looking like at the open. So where is my first one? So this is my first QQQ order with same week expiration with over $100,000 spent. Y'all can see again, it is a bloodbath. They said, I want my puts. There's always going to be a couple calls in there. Don't think it's always going to be all green or all red. But when you can see this is the whole page of red. And the market, look at this. So look at this. Let's actually look a little bit closer. So this is today. This is at 9:30 and 1 second. The market had been open for 1 second, and somebody bought over $100,000 worth of QQQ puts that expired this week. 4 seconds later, somebody spent $120,000 on QQQ puts that also expired this week. 5 seconds after that, someone spent $225,000 on QQQ puts that expired this week. This one was actually same day. So at this point, the market's been open for 10 seconds, and there's already about $500,000 in QQQ same week puts, right? Again, that tells you these people didn't give a damn about what else was going on. They were sitting here waiting to get in these. They were itching to get in these, right? This is all puts, right? The first call doesn't even come in until 9:31. Right. So within like the first minute of the day, there's about $1 million that have gone into QQQ same week expiration puts already. That is what you want to see when you talk about finding that opening bell flow. You want to see that sense of urgency. And that's exactly what that repeat flow tells you. When these people are getting in, the market's been open for 5 seconds, 10 seconds, 15 seconds. They're spending 200,000, 340,000, $500,000 on puts that expire today. You know QQQ is about to have a mean drop as soon as the market opens, right? That's exactly what it did. Now, shout out to Kendra because she called out QQQ puts. I played SPY. But either way, when you see that repeat flow coming into the open, this is another case. You could have literally bought puts at the open, held them all day, and just ate, right? Just absolutely killed it playing QQQ puts. You see, this one is also in a strong trend because it's staying below that 8 and 21 EMA. It falls down, down, down into oblivion. Super simple setup, right? When it comes to finding day trades. Now, I talked about finding that opening bell flow because I really love trading the opening bell. I like to be able to trade right there at 9:30. Um, this is something that can be used throughout the day, right? There's still going to be day trade opportunities that come at 12, at 2, at 11, right? We're just sticking to kind of opening bell so I could give that example today. Today was a good example to show that because we had a strong trend day and that trend was established at the open, right? And you can see people were ready for that, right? Like I said, these people kind of know it's good to be able to follow the big money because people are not spending large amounts of money as a guest. When you see all of this, look at this. Look at all this red. The market hadn't even been open for 30 minutes, and you see all this red, right? So that's the super easy way to let you know that you should be prepared for the downside. And as always, you still want to look at the charts for confirmation. It's not necessarily, oh, see flow, follow flow, right? It's see flow, check chart, confirm with the chart, then follow, if that makes sense. So that's something that I wanted to give you guys as an easy way to make money. And a simple way to think about it is you want to identify repeat flow, right? That's the first step. So you come to Capital Flow, you identify your repeat flow in the morning or the afternoon, whenever it is you're trading, doesn't matter. You check to see repeat flow. If you don't see repeat flow, for me, there's no trade. If you see chop, if you see call, put, calls, puts, right? Then there's no trade for me. This is what I want to see. You get an entire page full of puts. This is beautiful. This lets me know it's time to prepare for the market to drop, right? So when you see that, you go to the chart, and the simplest way for you guys to know when it's actually time to get in is you look for the nearest level of support or resistance, and then you look for either a break or a bounce of that support or resistance level. So, and that depends on how you guys like to use charts, right? You can use supply and demand, you can use basic support and resistance lines if you draw yourself, you can use pivot points, fib levels, you can use MAs, whatever VWAP, whatever it is that you guys like to put on your chart as your confirmation of this is a significant level. You identify the repeat flow, you wait for either a break or a bounce at that level, and that's how you know it's time to make this money. Let's see, I see some